The question right here, it's this one. It says, why is ZIVB using M4, M5, M6, and M7? Wouldn't be easier, better to have only two, M4 and M7, in the calculation, and how the rotation between 4 months looks. Okay, pretty much every volatility ETP that we know of, right? The usual suspects, VXX, UVXY, they're all playing in the front 2 month futures. But the new one, which arguably isn't new at all because it's a recreation of the old one called ZIVB. The old one was just ZIV. It was launched in 2010, November 29th, 2010, I believe. And it was delisted in, July 2020? Something like that. And now recently the ZIVB is back. Well, the ZIV uses M4, M5, M6, and M7. So his question is, well, why would you use 4 of them? Why wouldn't you just use 2 of them? It's just the way that they did it. They're playing in the middle of the term structure. So how this works, remember the front one, it's using only these 2. So it goes from 100 of this one to 0 of this one, and then it moves it forward over time to the point where this is at 100, this is at 0, it expires, it goes worthless, and this is the new M1. Well, the M4 to the M7, the middle 2 months have 1/3 allocation each, okay? And then the M4 and the M7 are the same kind of dynamic of the M1, M2 over here. So 1/3, 1/3, that does not get touched. 1/3 of the capital in the fund starts right here. And then every day that goes by in this cycle, it moves a little bit of it over to the M7. So you can imagine what's happening is it's moving some M4 to M7 a little bit each day. This one doesn't have any capital left in it and it expires. This one already had 1/3. This one already had 1/3. And this one built up 1/3 along the cycle. So now all 3 of these have 1/3 of the money and it shifts downward, and that becomes the new M4, M5, M6. And the new M7 has 0 capital in it. So the M4 starts filtering a little bit of the capital each cycle of the day into the M7. So I guess your general question, why did they do this? They could do whatever they want. It's just a simple calculation. And like I showed before, there's no value gained or lost during this rebalancing, and it's not overly difficult. It's rebalancing a portfolio. Anybody can do that. So you could use anything, right? The M1 and M2 are the fastest moving, fastest reacting fixed futures that there are. So that's why the VXX gets more bang than the ZIV does. That's why I used to love that old ZIV product, because when you get into a trade and you take a losing trade, it doesn't rip your face off if you take the losses. Something like the Volapocalypse event in February 2018, the ZIV, while it wouldn't have been a pleasant day either, down, what was it, like 16% or something, as opposed to the opposite, catastrophic losses for the front month futures. So the M4 to M7 is flatter, more stable, it's slower moving, it's longer term, and so it's a safer product. But then again, you don't get the bang for the buck. And what do people in the investment world always seem to look for, even though they're wrong to do this? They're looking for all the action. They're looking for the leverage. They're looking for the fast moving products, make big profit and show your gains on Twitter, right? So the ZIV never really got any love. And I don't suspect the new ZIVB will do any better. I think it's going to be quite poor. In fact, it'll probably be substantially worse than the old ZIV. Unfortunately, it's just not going to catch on. That's the mentality of most traders these days, is to go where the most action is, and the ZIV is not a sexy product. So I don't imagine it's going to do very well, but it is structurally well designed and it should be great. If everybody in the investment world could just shift over to that, I think that they would do better long term, because of course, the way I always describe it is, if you want to make the best rate of return, you don't try to improve your good times. You try to whittle away at the bad periods and make those not as punishing, right? Token golf analogy for the day. If you want to try to be the best golfer you can be, don't focus on hitting 300-yard drives. Focus on not hitting the ball out of bounds. You're going to be way better off if you just reduce the number of bad shots you hit rather than try to chase the occasional really good shot you hit. That's what I would suggest in investing as well. Try to eliminate the big losing periods, far more beneficial than the gains. So ZIVB should actually be the best product on the market. It should be better than VXX, SVXY, SVX. It should be the highlight of everybody's portfolio. But if it doesn't get the volume, then it's going to be untradeable and we can't do it. So this would be my short pitch to everybody out there. If we could just band together and get that ZIVB rolling, I think it would be better for all involved in the volatility space. Unfortunately, it's probably going to fall flat, just to be perfectly honest. The front month products are just more explosive, and that's what people chase. And I think they're wrong, but that's what they do. So for an extensive volatility metrics dashboard updated daily, and to see all of the live trades for our tactical rotation and option strategies, click this link right here. and claim your free trial to the VTS community. You're always welcome to join us anytime. See you next time.